Welcome to TradeTheMBI.com. This is John. This report is for the 17th, and while we're not going to get a whole lot of excitement out of where we're at this point in the month at least, or at least maybe until next week, we're caught right in these ranges of the ABMs, which are the DOFAST right there on the signs on the bottom of the list right there. Everywhere from 2750 to 2717. And we're like right in the middle of all that range. And in between there, you've also got the 76% and the bottom side, the 61 right here. So we're just in a little confluence range, and not surprising. I mean, we had green above red before on the DOC. Now we're slightly below. We're also decaying with long-term buyers. We had the little bullish attempt here from the extreme, but it just didn't pan out with the rest of the readings because we're right in the middle of what would be a DOC spread, which is short now. For the fact that we are in the middle of a short reading, hey, not doing so bad. And that's mostly because of the falling orange relationship here, which is to buyers and shorts. You're not getting any new active shorting at the same time of no new buyers. So without active sellers, price is holding up fairly decent. In fact, we have the short-term buyers of steel actually perking up today that have kind of were left over from the pick back up after the orange, and I mean the magenta candle here. And oftentimes after the magenta, if you don't get an immediate drop, it's usually one of those sideways situations where it just kind of consolidates. We'd have to have a breakdown into, we're about moving into a new zone. We're in the 779 here with the red. We'll see if that holds out throughout the day. That would lead to a much stronger decline, and very easily for us, you're looking at that 61% at 09 range, and then you can expect 2679, 50% range, but which would not be out of line at all. I mean, the range sort of moved down a little bit, so we're seeing an ease in the ATR. You can see a little bit healthier from a NASDAQ standpoint because it's above the ABM yellow. And you got a good separation with the different ABM levels, which is very nice to have because look at that. Between the 61 and the 50%, you've got the magenta, white, and green, and that gives a lot of different layers to be able to trade below, exit off, re-enter. Love that. That makes it just so much easier. Now, Euro. Okay, yeah. Who was it that said that the pop was a joke, that we were going to be with this amount of distribution? And then, of course, you had the lovely Italians declare that they just want to get rid of their debt. It's gone. Just eliminate it. Poof, away. And theoretically you could. It's just a ledger entry anyway, but hey, if they can do it, why wouldn't the U.S. get rid of a few trillion themselves? Could work out for everybody, right? Well, that's certainly causing some strain on the euro, but the euro's been out of whack anyway, and because the U.S. has stabilized, it's not really necessary to float it anymore. The rise in rates for the U.S. is certainly going to put we're expecting TLT down in that 113 range, have been for a long time. This has been way out of control. And again, this is that concept of people still are doubting whether or not the economy is actually growing. It's an interesting thing. Oil kind of tells that story because you have a massive increase in the supply capability and it's still getting used up, and because you only have a limited ability to refine a certain amount of it, and that hasn't expanded enough to match the ability to produce. So that's certainly going to keep oil prices higher. And like they already talked about, I think just in the last quarter, it was like an extra $4 billion was spent just because of the increases in prices over the last month. That only just starts to compound itself and grow. It's not enough yet to be a strain, but it's certainly going to ripple through from an inflationary standpoint. And go figure, you're seeing gold decline in that very prospect. Sort of an interesting thing. And this is something that we've talked about with the ETFs, and that the price of gold is being manipulated. Of course, we can say that about everything, but just in general, we're seeing nothing but the distribution, falling shakeout. It's all in line with what the readings are, but kind of unusual given what we're seeing global circumstances reading as. Well, here was the 5K day. It was kind of interesting. Started out, once we moved right above the 50%, for the previous, we got into this little back and forth. It was just some little tiny DOC spreads here. Interesting, because my favorites are, okay, you look at the big difference here. Anytime you have steel over red when you get a DOC spread, this is just an automatic short. Just pointing that out one so that you know that that one exists. The opposite effect is true here. When you get down to the negative 13.5, oftentimes it's that distance, that turnaround that takes place in the steel. If the steel stays below 13.5, fine, you're great. But as soon as it comes up, and then you have orange dropping as well, this is super bullish. That's like the closing of the mouth of the snake that you look for, because the snake started right here. Okay, the tongue came into the snake right about there, so that's like the perfect short opportunity at that particular point. Falling green, falling red. Green isn't below red, but it's still falling, and that continues to cascade. So you can see that the short really began with the snake earlier and sort of ended by the time we ended up with the full DOC spread, because you had such a huge opening that all that was left for it was to close. And as it closed, it rose again, and then it produced a much more significant short setup right there with that DOC spread where the steel was above, and well, that produced the closest return to the 50%. But you can see at the 50%, all we had was no dip below the red line and very bullish. And when you don't break that 50%, you know exactly what's going to happen. Yeah, we got this right here, and well, it took off. You ended up with cyan below red. And that just propelled it. Now, we did end up with positive extremes. Okay, that means the low of this bar needs to get retraced. So we go ahead and take a look at that. 27.18. Well, all of a sudden, you pop up to 26. Well, now it becomes interesting. 8 points is what you're looking at from a short side move. And another DOC spread right here. Much closer to the red down, usually for me, is when you cross below for the DOC spread and the steel crosses. You've kind of ended the first leg, and then what you're looking for is steel to cross cyan to kind of end it, which sort of takes place right here, but it immediately flips over. And then what I do is I look for, if you get the cross of the steel, I look to see if green has crossed. If green hasn't crossed red, then you know you're okay. In this particular case, that just led to a break of the 50% to the 38, but that was enough to do what? Yes, fill the positive extreme right there, nice and easy. Well, I'm not even at the low. The low, I've got to come over a little bit so you can see it right about there. All right, and that's exactly what it did. So pretty straightforward. And then, of course, we ended up with a nice buy that came through down here, and unfortunately doesn't really produce anything until you get your first decline in the orange, which took place right there, and that turned out to be the peak move. This is what happens when you get that late. What you're looking for is you like to see that dip early on. It's that premier one that sort of gives you that bounce that allows the green to overtake cyan, and then you're looking for that, to become the continuation thread where the steel rises above, or at this particular point when you have green above, that steel is all the way down below, and that gives you those very long runs where steel just stays below it. This particular time, below the 50%, so it turned for the short, and well, at this particular point, all it's doing is filling back in this dip below the red line on the extreme right down here, the purple. And that's going to look for just below the 38% here at 17. So again, we had that number from the daily. So again, it's interesting that these confluence areas keep popping up. Pay attention to it. It's worth noting. And that'll keep you on track. We're fairly decent. 16 is the range between the high and the low. At this particular point, it was 24 earlier in the afternoon on the little breakout. But all that breakout did was left more range for price to fall. You just have to be at the right spots. Now, you could have gone with these earlier ones and you would have had to sit through boring setup it happens. But the point being is, a lot of times, even with these sideways or even slightly up moves, even within them, you can get out of them, particularly when you can see these positive extreme setups, because they give you the clear symbol of where price has to go to. So it becomes very effective for target risk management. Something worth pointing out. Well, there you go. We just got down to the fill of the dip below the red line right there. So anyway, that's the long and the short of it for right now, and I will continue to put up charts as they're relevant, trade well, and keep at it.